Hello and welcome from Trend Signal for our review of the data and events the week beginning the 21st of September. So there we have it, a dovish statement from the FOMC last Thursday, and the reaction to the Fed's take on things has been quite marked. Equity markets were in retreat last Friday following the reaction to the Fed decision on Thursday evening. Forex markets also experienced a volatile day Friday with late and significant rebound in the dollar. The euro dollar actually fell up just under 200 points from its peak as traders cut long euro positions in some hurry, actually, as it turned out. Yields on bond markets fell, i.e. prices rallied in reaction to the firm's statement and Chairperson Yellen's comments. Markets on Monday morning were lower, although the Nikkei was closed due to a bank holiday in Japan in observance of the respect for the Aged Day. In fact, there are 3 bank holidays in Japan the start of this calendar week. Perhaps they'll need a little bit of getting over the amazing result in the World Cup rugby, but hopefully any hangovers will have dissipated by Wednesday. A review of the markets, really last week, equities were fairly flat on the week despite all the news. The only market that was weak, really pronounced weakness in the DAX, which was down 260 points on the week, or just over 2.5%, perhaps in anticipation of some sort of upset in the Greek parliamentary election. But as it turned out, Tsipras and Syriza persevered and prevailed in that election, and Mr. Tsipras has got a strengthened mandate, which on its own would be positive, but unfortunately there's a lot of other things going on at the moment. So why the reaction in the markets if the Fed decided to keep rates unchanged? Surely continuing low rates would be good for equities, I hear you ask, but it's the commentary from the Fed and the press conference that followed that points to continued weakness from emerging markets, especially China, as a major factor for the change in rates. Obviously, there's no price pressures at all to speak of, and I think that probably also helped sway all but one of the FOMC members to vote to keep rates unchanged. Jeffrey Lacker, who was on record as saying he was going to vote to raise rates, was the lone voice voting for a rate rise, but the FOMC statement really raised these concerns over emerging markets and the effect on the US economy, and the vote was very clear in the end. China, I guess, has devalued its currency only modestly, but at a time when the US dollar has rallied over the past year, the combined effects are quite a drag on the US economy, as with a stronger dollar limiting exports to China as goods cost more in dollar terms. Dollar as well. The euro was, I think the move in the euro was probably misinterpreted. Just because there's no rate rise imminently, doesn't mean that the Eurozone is doing particularly well. Aside from the Tsipras and Syriza election result overnight, which may help sentiment, I think the Eurozone has got a long way to go. And if the global economy is at risk from a further deterioration, then I guess you could say which economy and which currency is likely to fare best. So, and I think that's one of the reasons why we saw that turnaround on Friday. Data and events this week. It's a fairly light calendar this week, in the final week, full week, I should say, of September. The highlights of the week include a couple of speeches from central bankers. We got Mario Draghi and Chairperson Janet Yellen speaking. Mario Draghi at 2 o'clock on Wednesday, and Janet Yellen speaking in the evening on Thursday. Those will have some sort of market moving effect, but the main event of the week, looking as we do at the calendar for the week, actually is the core durable goods out in the US on Thursday at 1:30, but actually of increasing significance, and in light of the concerns voiced by the Fed, emerging markets and specifically China, the cakes and flash manufacturing PMI on Tuesday night, Wednesday morning will be very significant, and in any particular miss from this forecast to 47.6, which is still a very low number anyway, albeit a slight improvement from the previous month's 47.3, I think could cause a lot more angst in the markets again. and I think sensitivity to Chinese data could see further volatility in the Chinese indices, especially as the state continues its attempts to ward off further declines. Other than that, it's a fairly quiet week, really. The following week is the one that'll cause us to sharpen our pencils as we start the new month, October, with non-farm payroll at the end of next week. So certainly next week could prove to be quite interesting. And the question continues, as it will do until the Fed do raise rates, will they, won't they? Sadly, we're no nearer answering that question, when they're going to do it. That's it, all a bit brief this morning. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.